We have all grown up with the saying like health is wealth, where we all associate wellness and living a healthy lifestyle with this saying. We often forget the monetary impact of health. Whether it is staying fit or taking care of our health or providing for any health emergency, we generally do not put too much thought into it and be extremely optimistic about it that nothing bad will happen to us. And if in a situation ever something happens, we fall back upon our savings and investments to take care of it. In India, the health costs are increasing at 15% per annum, and the cheapest way to provide for any kind of health emergency is to have a health insurance. Most of us rely on our savings, investments, or borrow money for any kind of health situations, and that is where our entire financial plan starts going downhill. So the first thing after taking care of your life insurance is to take your own health insurance. And in this session, we are exactly going to understand about what is health insurance, various features of health insurance, and how much health insurance should you have. The reason why most Indians do not go for health insurance is because there is nothing in return that you get. So when you take a health insurance, it is like a pure term insurance or motor insurance where you pay a small amount, your premium, to the insurance company, and if during the tenure of the policy, which is generally a year, if you're not hospitalized or you face any health emergency, you do not get anything in return from them. So your health insurance premium is a cost that you are incurring year on year to take care, to provide for any health emergencies. So having a medical insurance to meet any sudden or planned medical requirements is a must, as buying a health insurance is a much cheaper option for anyone than spending all their savings on the treatment. There are two ways in which health insurance works. Is generally a cashless policy or a reimbursement policy. So when you take an insurance which is cashless, you do not have to pay anything to the hospital. The insurance company directly pays to the hospital. In case if there is no cashless feature in your policy, then you have to first pay from your side to the hospital, so you need to have those funds arranged, and then the health insurance company reimburses you for the payment. Ideally, you should go for cashless policies, and you have to be hospitalized to claim health insurance cover. But nowadays there are some health insurance policies which also cover daycare procedures. Because of progress in science, there are some procedures like cataract which do not need hospitalization anymore but are covered in your health insurance policy. So there are two major types of health insurance policies. One is an individual health insurance policy in which only an individual is covered, that is, you are covered, whereas there is a family floater policy in which under one policy the entire family is covered. So let's understand what is an individual health insurance policy. When it's a family of 4 people like Arjun, Leila, the older child and the younger child, each person is individually covered for 5 lakh rupees. So if Arjun gets sick and his hospitalization bills comes to 3 lakh rupees, and if everything is in order, the health insurance company would provide the claim, and you can go for the claim to the health insurance company and you would be paid in full. However, after that, say in the same year, even Leila gets malaria and her hospitalization bill comes to 3 lakh rupees. Now, because she has her own individual health insurance policy, she would also get the reimbursement in full. So that's the advantage of having your own individual health insurance policy, that if you face any health situation, you are covered to the extent of the sum assured of the policy. And where you're younger, the health insurance premium is also lower. So when it comes to going for individual policies, say you and your parents are there, then your parents' insurance premium amount would be higher compared to yours. So when you go for an individual policy for yourself, you will end up paying lesser amount for the same. Now the other policy that you could go for is a family floater plan. In this, one umbrella or one insurance cover is there for the entire family. So it's a family of 4 members, Arjun, Leila and their 2 children. So all of them are covered for 5 lakh rupees. So unlike individual policies where there is a dedicated sum insured for each person, under family floater plan, it is a single floater which covers all the members of the policy. So here, because the sum insured is 5 lakh rupees, that means that the insurer's maximum liability towards the entire family for a particular year, irrespective of who gets hospitalized, would be 5 lakh rupees. Whereas in an individual insurance plan, each member's cover was separate to the extent of sum insured. So let's see how does a family floater works. As we said that the total cover under the family floater is 5 lakh rupees. So taking the same example as above, say in a particular year in June, Arjun gets malaria and his bill comes to 3 lakh rupees, then he would get a cover in full of 3 lakh rupees. And say in August, Leila gets sick and her hospitalization bill also comes to 3 lakh rupees, but she will not get the complete 3 lakhs reimbursement because their health insurance policy is only of 5 lakh rupees and it's a family floater plan. So only 2 lakhs would be paid by the insurance provider and the family would have to provide for the balance 1 lakh rupees from their own side. So this is what we mean by that the entire family or all the members of the family are covered to the extent of 5 lakh rupees. So where you have that financial stability that you can take individual policy covers for each member of the family, then that is better, because in such a situation every person has their own individual covers and only their health insurance gets impacted in case of their health emergency. And also in an individual health insurance policy, you can go and get a higher cover for the working members of the family as compared to the other members of the family. Whereas in a family floater plan is a great way to save cost. So where you have a cash crunch and you still want to have a health insurance cover, family floater plan is a great way to start with getting a health insurance and also cover all the members of your family. As you can see in this example, in case of an individual health insurance policy, the total premium for 4 members comes to 35,614, whereas under a family floater plan, the premium comes to 18,768. So clearly family floater plan is a great way to save cost and also have a health insurance. Furthermore, your premium of the health insurance is impacted by the age of the covered members. So where you are 21 and say your parents are 50 with some pre-existing illness, then their health insurance cover would be higher. And if in case you go for a family floater with them, then you would also end up paying a higher premium to get covered in the same floater plan. So it's advisable that have a floater plan for your parents where they come under similar age group and have an individual plan for yourself. And if you're married and you and your spouse of the same age, then you can consider going for a family floater plan and add your child to that. So clearly it's a discussion of how much you can spend for the health insurance and then going for it accordingly. The next question obviously is that how much health insurance is enough? what should be the sum assured of your health insurance? Clearly, the hospital costs and medical expenses are just increasing day by day. So your sum assured would depend upon the hospitalization expenses in the city that you are living in. So where you are living in a metro or a tier 1 city, then have a health insurance sum assured of a minimum 10 lakh rupees. Where you are staying in a tier 2 city, then a minimum of 5 lakh rupees is also good. So just understand that these are benchmark numbers that we are giving you. If you want to have a health insurance of more than that, then also it's okay. And if you feel that the premium for a 10 lakh health insurance is a lot for you right now, you can probably start with a lower insurance cover amount and then eventually increase that when your income increases. So let's understand what are the factors that you should consider before you buy health insurance. That health insurance features keep changing from insurance provider, and hence once you get your factors in place and the things that are must for you, then you can compare various insurance policies and pick the one that suits your need. So the most important factor that you must check with an health insurance is that nearby hospitals, the hospitals around your area are covered under the policy. Because if any health emergency happens, you're first going to go to the nearest hospital to your house, and if that is covered under the network hospitals, then you will not have to spend anything from your pocket, but the insurance company would directly pay to the hospital in a cashless. If there is a co-pay option, avoid co-pay option to the extent possible. Co-pay means that when you take a health insurance and say your hospitalization bills comes to 2 lakh rupees, then in case of co-pay, the insurance company requires you to pay along with them. So a co-pay could be of 20% or 30%. So you may end up paying 40,000 rupees from your pocket, and the insurance company would only pay to the extent of 80%. So ensure that the health insurance policies you are taking, it is 100% reimbursable or 100% cashless, and you don't have to co-pay anything for it. Check if medicine costs are covered, if there is any room rent or ICU charges which are not covered, and it may happen that you end up spending that money from your pocket. Ensure that fees for doctor consultation are also included in your health insurance policy. So you must focus on the service rather than the premium in case of health insurance. Do not go opt for the cheapest health insurance provider over there, but check that what all situations he covers under the health insurance policy and if they fit into all your needs or not. Especially network hospitals, 100% cashless and no room rent limits. Now, factors which you can avoid and really does not impact your decision making when it comes to getting that health insurance policy is ambulance charges. Now, seriously, ambulance charges are hardly 2,000 to 3,000 rupees. So even if it's not covered in your health insurance policy, but all the other factors are there, then it's okay. Daily hospital cash. Some health insurance policies have these provisions where they give you 100 or 150 rupees from their side for every day you're hospitalized. Seriously, that 100, 150 rupees is not going to impact your monthly income or expenses in any way, and this provision could in fact increase your premium going forward. And the most important feature that you must know of in a health insurance is that the premium increases every year in a health insurance policy. As we discussed in the previous session, that in a term plan, once you buy the term plan, the insurance remains standard throughout the year, whereas in a health insurance, your insurance premium increases. So there are some features of the health insurance that we must know of, and we are highlighting them for your understanding. So each insurer company has these features of providing annual health checkup in a block of few years or a free checkup. The eligible amount and the list of tests are also defined in the insurance policy. So you can avail for the same by scheduling an appointment or visiting the center of your choice. Then there is a restoration or refill benefit. That means that, when you have a health insurance of say 5 lakh rupees, but you've used the entire sum assured in the same year and you again fall sick and the sum assured is insufficient due to the claim, the restoration benefit can be opted for. Basically, your sum assured is restored and you can use your health insurance policy to pay for the additional bill. Then there is Ayush treatment, which refers to the medical or hospitalization treatment given under Ayurveda, yoga or natural therapy, Unani, Siddha or homeopathy system. So basically, these treatments are covered only when they are taken by the government hospital or in an institute which is recognized by the government hospital. There are also certain other criteria which are specified under it. So before you go opt for that Ayush treatment, just ensure that you read the terms and conditions under your health insurance policy. Now there are some policies which also cover dental treatment or oral treatment, such as oral chemotherapy, robotic surgery, bariatric surgery, stem cell therapy, so which are basically new science treatments. Generally, your dental treatment was not covered in the health insurance policy and it was covered only when you have to take any dental treatment in case of accident. But now after certain waiting period, even dental is covered under some specific policies with an upper limit. So you can check that. Next thing is organ donor. Organ donor covers the medical and surgical expenses of the organ donor for harvesting the organ. So obviously these are some very peculiar features of a health insurance policy and you must check them in the terms and conditions of your specific policy. Now the main features which are there in all health insurance policies is your pre-existing diseases. Now, pre-existing diseases are not covered in health insurance. Basically, there is a waiting period. So, if you have any health issues such as heart problem, blood pressure problem or sugar problem, you must disclose them to your health insurance provider and there would be a waiting period of 36 to 48 months. After that, any illness related to that would be covered. Then hospitalization cost is covered. So there is generally a notion that you get health insurance cover only in case where you're hospitalized for more than 24 hours. Well, nowadays some daycare procedures are also listed in the insurance policies and the same can be covered even where you're not hospitalized. Maternity cover is basically where you are pregnant and your maternity expenses are covered under the health insurance policy. Clearly, this is not a contingent event but would happen mostly in the near future for women. So there is a waiting period of 9 to 72 months in your health insurance policy and even after that there is a cap in it. So if you are looking to opt for your maternity cover using health insurance policy, we would advise to check the fine prints in your insurance papers. So there are quite a few features from understanding pre-existing illness to being hospitalized for more than 24 hours, looking at the daycare procedures or going for that free health checkup. It's important that when you opt for that health insurance, go through the terms and conditions and understand the features of your specific policy. Now, once you've taken a decision of taking that health insurance, if you are having second thoughts because you feel that, oh, my employer is providing me with a health insurance, why should I go and opt for my own insurance cover? Well, the first and the basic reason is what happens when you change your jobs and you're in between your jobs and you get sick then. If you lose your job or in case your employer decides to change certain policies and payment structures in that they decide to let go of their health insurance, then you would be at the receiving end of not having health insurance. And if you decide to have a health insurance later in your life, say post-retirement, then first your pre-existing diseases will not be covered. You would have to have a waiting period of 36 months to 48 months, and if any kind of health emergency arises in that situation, at that point of time you would be very helpless. And many times people don't realize that a lot of employers keep changing their policies. In such a situation, they could just decide to have a co-pay in the health insurance, where even if your employer provides for health insurance, you have to pay 20% to 30% of the hospital bills from your side. So it is extremely important to have your own health insurance policy, even where your employer has one. As we just discussed, having your own health insurance is even more important in a situation where you may decide to change your jobs or take a break from that work for that year. You may never know that if health emergency comes, then you are at a complete loss. So having health insurance is a must. Well, one of the added advantages of having your own health insurance is no claim bonus. Basically, when you take a health insurance earlier on, firstly, you don't have any pre-existing diseases. Secondly, you get the health insurance for cheaper. And the third reason is no claim bonus. So, no claim bonus basically takes care of your loss of premium in case of no claim year. Basically, if you take a health insurance and you do not get sick in a particular year, a lot of people feel that, oh, I paid the premium but I did not get anything out of it in that particular year. What you get is a bonus which is added to your sum assured from insurance company, and this is called as no claim bonus. It could be to the extent of 10% of your sum assured. So where your insurance policy sum assured is 5 lakh rupees and you did not get hospitalized in that particular year, you would get a 10% bonus from the insurance company, and your sum assured would be 5,50,000 rupees, and your premium would not increase to the extent of that 50,000 rupees. So that sum assured of 50,000 rupees is a bonus or an advantage that you get for not getting hospitalized in that particular year. So no claim bonus works great for individuals who are starting out young and don't have any health illnesses as such. If you do not get hospitalized for even first 4 or 5 years, then your 5 lakh sum assured increases to 7 to 8 lakh rupees without paying that extra premium for that sum assured, and you keep paying premium to the extent of 5 lakh rupees of sum assured. So definitely this is a great benefit to get an health insurance at the earliest. Now, because of this no claim bonus, in case you have a health insurance from your employer and you have your own health insurance and you face any health emergencies, then opt for your company's health insurance first, and if there is an added need for more cover, then go for your personal health insurance. Always ensure to use your personal health insurance last, so that you can keep adding your no claim bonus to your personal health insurance. So ensure that even your parents have a health insurance policy, so where you're responsible for your parents financially, or otherwise know that they have their own health insurance policy even after they are retired, and they're not just relying on their company's health insurance policy. And just not that they have a health insurance policy, know about the various features of that health insurance policy and how to use that claim from that insurance policy, so that if a situation arises that you have to use it, you must know how to apply for the claim. So there are certain things that you must keep in mind when it comes to your health insurance. It's just not about getting the health insurance, but you should also know how to access the claim for the same, whether it's for your spouse, your children, or your parents. And someone else should know that you have your health insurance and how to access the same, in case if you ever meet with an accident or any health emergency, they should be able to access the same immediately. You get a health card from health insurance providers. You can keep it in your wallet so that it's extremely accessible. Well, there are some health insurance companies which nowadays even have an app where all your details are updated on the app. So you can download the app from your insurance provider and have it on your phone for easy access. And always disclose any pre-existing health issues in your health insurance policy. Even if your premium increases by 100 or 200 rupees per month, do not lie on your insurance papers. And if you drink or smoke, do disclose these facts in your insurance papers. You don't want that after so many years of paying insurance premiums, when it comes to claim, it gets rejected for silly reasons like not disclosing these facts in your insurance papers. So disclose all the facts correctly in your insurance application. And where we've discussed that the bare minimum health insurance to go for is 5 lakh rupees. But if you feel that the premium of that is too much for you right now, you can start with having a health insurance for a sum assured of 3 lakh rupees, and eventually through no claim bonus and otherwise increase it year on year and provide for the health insurance appropriately. So we've already discussed that having health insurance is extremely important to have your complete financial life secured in the right manner. Not every place where you spend money to take care of your finances is you're looking for returns, but at some places like your emergency fund, life insurance and health insurance, you're actually taking care of those situations where your money can sink, where your savings and investments can go bust. So you're providing for these situations and pre-planning for them and taking care of it in advance, and then you start investing properly. So what are the 3 major things to remember when it comes to health insurance is that you must have your own insurance even where your employer has one. If you have a budget constraint, you could go for a family floater plan, and if you're comfortable, then have an individual cover for each member. And the third thing is that inform your family members about your insurance policies and know about their insurance policies to access the same without any issues. So where we've taken care of all the contingencies so far, the next session is about discussing inheritance laws and will writing, where we shall discuss that once your estate has been taken care of, how you ensure that it goes to the right people through our session, Inheritance Laws and Wills.